Hi, I'm a representative with GAV Insurance, and today we're answering one of the most common questions I get from people in their 40s and 50s. What's the difference between term life and whole life insurance, and which one do I actually need? By the end of this video, you'll know exactly what each policy does, what it costs, and how to decide which one is right for your family. Let's meet two people who asked that exact question and made two very different choices. Meet Alex, 44 years old, two kids in middle school, a mortgage, and a spouse who depends on their income. And meet Morgan, 46 years old, financially stable, kids nearly grown, thinking about legacy, estate planning, and what gets left behind. Same age range, same core need protecting their family, but very different situations. Alex chooses term life. Morgan chooses whole life. Here's why both of them made the right call. Alex chooses term life, and here's exactly how it works. A term life policy provides coverage for a specific period of time in Alex's case, 20 now. Let's look at Morgan's choice, whole life insurance. Whole life works very differently from term. Instead of covering you for a set period, it covers you for your entire life, as long as you keep paying your premiums. Morgan's policy provides $250,000 in coverage, and it will never expire. Ever. But here's what makes whole life truly unique. Part of every premium payment goes into something called cash value. Think of it as a savings component built right into your life insurance policy, one that grows on a tax-deferred basis over time. Morgan's policy builds approximately $80,000 in cash value over 20 years. That money belongs to Morgan and can be borrowed against or withdrawn for retirement expenses, emergencies, or anything else. Now, the honest trade-off for whole life. The premiums are higher. Morgan pays about $300 a month, 5 times more than Alex pays for term. And for that $300, Morgan gets $250,000 in coverage compared to Alex's $500,000. Less coverage per dollar, but coverage that never expires, plus a growing financial asset that provides real value in retirement. For Morgan, whose financial obligations are decreasing and whose focus is shifting to legacy and long-term planning, whole life is exactly the right tool. Let's put both policies side by side so you can see exactly what you're comparing. Term life, Alex's policy, $60 a month, $500,000 in coverage, lasts 20 years, no cash value. Whole life, Morgan's policy, $300 a month, $250,000 in coverage, lasts a lifetime, builds $80,000 in cash value. Looking at those numbers, you might think term life seems like the obvious winner. More coverage for less money. And for many people in their 40s, it absolutely is. But here's what the numbers don't show. Morgan's policy builds real financial value. That $80,000 in cash value is an asset Morgan can actually use during retirement. And Morgan's family will receive that $250,000 death benefit whether Morgan lives to 70 or to 95. There is no better policy. There is only the policy that fits your life, your financial goals, and your family's needs. Let me show you what happens to both Alex and Morgan 20 years from now. Fast forward 20 years. Alex is 64. The kids are grown. The mortgage is paid off. The financial obligations that made a $500,000 policy so important are largely gone. Alex's 20-year term has done exactly what it was supposed to do. It protected the family through the years they needed it most. Alex may choose to get a new, smaller policy at 64, or may decide the existing savings and retirement accounts are sufficient coverage at this stage of life. Now, let's check in on Morgan. Morgan is 66, and the whole life policy has been quietly doing two things this whole time. First, it's been providing $250,000 in guaranteed protection every single day for 20 years. Second, it's built up approximately $80,000 in cash value. That's money Morgan can borrow against tax-free to supplement retirement income, cover unexpected expenses, or pass on to the next generation. And here's the key: Morgan's policy doesn't expire. It will be there at 70, at 80, at 90. Both Alex and Morgan made the right choice, because both of them match their coverage to their actual situation. That's exactly what a good insurance agent helps you do. So, which one is right for you? Here's the quick recap. Term life, lower cost, higher coverage, set time period. No cash value best for families and mortgages. Whole life, higher cost, permanent coverage, builds cash value best for legacy, estate planning, and lifelong protection. And if you're not sure which one fits your situation, that's exactly what I'm here to help you figure out. For free. I'm an agent with GAV Insurance. As an independent agent, I compare policies from multiple top-rated carriers, not just one company, to find the best fit for your family at the best price. Call me, text me, or visit gavinsurance.com. Thanks for watching, and thank you for taking this step to protect the people you love most. Choose term life if you have children at home who depend on your income, a mortgage or major debt to protect against, and on a tighter monthly budget or a specific financial window. Please like, share, and subscribe.